very warm welcome to all the participants or all the distinguished invitees. I, Alka Agarwal, on behalf of Women Members Empowerment Committee, extend my hearty welcome to all of you. Happy Ganesh Chaturthi to all of you. We have not yet been joined by Amritjit sir and Preeti Savla ma'am. So I think we should start with the session right now. For this, I would like to please request Sri Renuka Deshpande to give a brief introduction of our first speaker.
Good evening. Good evening, everyone. Thank you. In today's series of Sky High, we are having with us CA Shivangi Samdani. CA Shivangi Samdani is a chartered accountant and is a partner with R. Sogani Associates, Jaipur, in direct tax vertical. She handles income tax litigation matters and regularly appears before CIT appeals and ITAT for representing cases. She has a number of reported decisions to her credit. She has presented papers at various forums like Center of Excellence Jaipur, Jaipur branch of ICI, Kishangarh branch of ICI, and so many other branches. Prior to working with R. Sogani as consultant, Shivani has worked with Deloitte Haskins Sells LLP Mumbai as an assistant manager in statutory audit department. She has a multi-faced personality, and apart from outstanding educational records, she is also Visharad in Indian classical music and has keen interest in various other co-curricular activities. We are fortunate to have such a versatile personality with us. I request C. Shivangi Samdani to take over the charge and guide us on clauses under tax audit report and revised guidance note. Thank you.
Thank you, Renuka ma'am, for such a warm welcome. I'll just share my PPT and then we can start with the session. So respected all the dignitaries, respected office bearers of WMEC, conveners, and everybody who has joined us virtually. I extend my heartfelt thanks to WMEC and Preeti Savla ma'am who have allowed me to speak on this topic and to address such a huge audience. Thank you very much. Today, on this auspicious occasion of Ganesh Chaturthi, let us pray from Lord Ganesh that this tax season of all the practicing chartered accountants fraternity goes really well. And we just can say Ganpati Bappa Moria. So friends, every year, in spite of filing hundreds and thousands of tax audit reports, we still feel there is a need of discussing topics for tax audit before we start filing it. The reason being, income tax audit report, it almost covers the entire Income Tax Act. It is so vast that we need to revise all the clauses, all the sections again and again before we start our reporting. Secondly, these days, many amendments are coming, amendments in section, amendment in rules. There are many interpretations, and the clause 3CD, clauses in 3CD are also being amended on time-to-time basis. So there is a need to brush up ourselves every year before attempting filing the tax audit report. So friends, let us discuss this tax audit report topic in the next coming 1 hour and attempt to develop more clarity over the subject. The clarity is all the more important because tax audit report is not just for the purpose of income tax department. It is a general purpose statement. It is laid before various forums. It is laid before various departments. It reaches to various regulators. These days, we are aware of the fact that CAs are soft targets to various regulators, and many strict actions are being taken against the chartered accountants. So our role, which is a very important role, has to be exercised with due vigilance, with due care, and with due precision. So friends, starting with my topic, I would first discuss upon and touch upon the reason why at all tax audit is required. What is the rationale behind this concept of tax audit? To my understanding, there are possibly two reasons for it. Number one, we assist assessees. There is a huge accounting indiscipline. Assessees don't know what are income computation disclosure standards. They don't understand complex subject like income tax. They just prepare their accounts somehow and they just hand them over to us. Thereafter, we handhold them. We check all the compliances, whether they are in place or not. If TDS is not deducted, we press upon them and get the TDS deducted. So in a way, we are hand-holding them and we are ensuring it that whatever return assessees are filing is the correct return of income and the taxes which are due are actually properly paid. So this is one role which we are doing. Second part of it is assessing officers. India is a vast country. Lot many assessees are there. Income tax department is a very robust department. However, it is practically not possible for them to drill down into accounts of each and every assessee and bring out the discrepancies, the disallowances, and lot many things. So they need somebody to help them out. And I think legislature has very smartly outsourced this work to us. What we are expected to do is what the assessing officer has to do. We make report. We just don't give orders, but we do the entire exercise which a assessing officer has to do. We look into all the disallowances, we look into all the non-compliances, and by way of our report, we assist assessing officers so that they can do a better assessment, they can understand the return well, they can understand the assessees. So this is the whole purpose of tax audit. Since I'm given 1 hour's time and taking tax audit clause by clause is practically not possible in such a scenario, so I am restricting my discussion over few important aspects which I think are important to be discussed. We'll first discuss about section 44AB, which from where the issue of tax audit arises, which talks about tax audit, and we will understand its interplay with few presumptive taxation sections. We'll discuss about audit of charitable organizations, then tax audit report, what is our role, what is the impact on assessee. There are few new reporting requirements this year. New Schedule 3 CARO 2020 has come, which is also linked with 3CD somehow, and few of the important clauses which to my understanding and which I feel I revisit every year and I discuss upon every year, I will be touching upon them. Let's start with section 44AB and 44AD. This is business basically. So section 44AB says that accounts of any business are to be audited if total sales, turnover, or gross receipts from the business exceeds 1 crore in that particular previous year. Now it talks about sales, turnover, and gross receipts. We understand what is sales turnover. Although these terms are not defined under income tax, Institute has issued guidance note which help us to understand what is meant by turnover, what is meant by gross receipts. So we can say that whatever is received into the business is basically gross receipt. If we are selling scrap, the proceeds which are received from scrap will tantamount and will be included into gross receipt. Duty drawback received, or maybe some insurance claim received, all these will become part of gross receipts. So we'll have to consider them while calculating the limit of 1 crore. However, the things which are not directly related to business will not form part of gross receipts. There may be some investment property in the business which is let out and rental receipts are coming in. That is not related to business. That is a investment, and the income regenerated on investment will be a house property income. So that will not be considered to be gross receipt. So this way we'll calculate gross receipt. So this is the first scenario. More than 1 crore, the audit has to be done. There is another scenario which has been introduced 2 years back only, that if sales are less than 10 crore rupees, sales turnover or gross receipts are less than 10 crore rupees, and the assessee has made all the expenditures, more than 95% of the expenditures by way of account pay check, bank draft, or the modes which are allowed, and have received 95% or more of the receipts by way of account pay check, bank draft, or the modes which are allowed. So this amendment was brought to check the flow of cash in the economy. They say that if you enter into transactions majorly via banking channel, then the limit of 1 crore for tax audit extends to 10 crore rupees. But we have to make sure that less than 5% of the expenses are by way of cash or by way of bearer checks or bearer draft. And in the same way, the receipts are also less than 5% via cash or via bearer check or. So this is particularly this section is very simple. Coming to 4480, this is also very common and we read it every year. Individual HUF partnership firm, basically eligible assessee who is running eligible business and whose turnover is less than 2 crore can opt for presumptive taxation. They will get the benefit of not maintaining books of accounts, and 8% or 6% or a higher sum, as the case may be, will be their deemed income. Now, the problem arises when we read both these sections together. So individually, these sections are simple to understand. However, when we try to understand both of them together and understand the interplay between them, there is a whole lot of confusion. Confusion is there because by Finance Act 2016, a concept of opt-in and opt-out came. So there is a subsection 4, which was introduced via Finance Act 2016. And it talks about a situation that if eligible assessee do not opt or do not take benefit of 44AD, and when it has taken benefit of 44AD and subsequently he exits from it, then for next 5 years he'll have to get his accounts audited. So there is some concept of opt-in and opt-out. Friends, there are wide varieties of views available in the market. Maybe my view is different, your view is different, and I don't know which view is correct. Till date, there is no clarification on it. Unfortunately, there is no precedence by which we can understand which view is the correct view. But today, I will be taking the view I follow, which is the most conservative view. So my discussion about the interplay will be on the conservative view, which I follow in our office. We understand that there is no option available to the assessee who is eligible assessee and who is running eligible business to not to opt 44AD, because it's a deeming fiction. The moment one person is eligible assessee and runs eligible business, he will have to declare deemed profits 6% or 8% or higher sum, and if not, will have to get the accounts audited. However, because of introduction of subsection 4 under 44AD, which talks about opt-out, there is another view that and why at all the word opt-out has come. So it's a very complex thing which I don't understand completely. My view is different. My view is conservative view. So based on it, I have prepared a reckoner. Also, one thing which I would like to highlight is that audit is required in case of 44AD when 8% or 6% is not offered for taxation and the income exceeds maximum amount not chargeable to tax. So if the income is lesser than maximum amount not chargeable to tax, then there is no need of audit. I have prepared a small reckoner as per my conservative view. I hope you people will appreciate it. So scenario A is when the turnover gross receipts are less than 1 crore and 8% of the profit is declared, meaning thereby 44AD is opted and there is no need of audit. This is very clear. situation B is when the turnover is less than 1 crore, but 8%, 6%, or whatever the case is not offered as deemed income. In my understanding, audit is required in this scenario because 44 AD appears to be mandatory to me. Few people are of the opinion that only when one opt in for 44 AD and thereafter opts out, then only audit is required. So there are two possible answers. One, get the audit done. Second, only in the case of opt out. Opt out as in some previous year, you have taken benefit of 44 AD. The assessee has taken benefit of 44 AD. And this year, he is not willing to offer the deemed income for taxation, which means the person is opting out for it. Then audit is also required to be done. Scenario C is the scenario wherein the turnover or gross receipts lies between 1 crore to 2 crore. And if 8% of the profit is declared, then again 44 AD applies and there is no need of audit. However, if 8% is not declared and more than 95% of the transactions are through banking channel, then also, as per my conservative view, audit has to be done because presumptive taxation is not opted. Even if 95% or more of the transactions are by way of banking channel, still there is need of audit because 44 AD does not provide for any sort of relaxation if transactions are done by way of banking channel. It just says that the deemed income percentage will come down to 6% from 8%. So it is immaterial, it is insignificant, and it is irrelevant whether the transactions are by way of banking channel or not. And the last scenario where the turnover lies between 2 crore to 10 crore, 8% is not opted, and more than 95% of the transactions, receipts and payments are via banking channel. So in this scenario, no audit is required because 44 AB specifically provides for this relaxation. So to my understanding, D and E, if I compare D and E, it appears to be unfair. Small assessees, even if entering into banking transactions majorly, are still required to get the accounts audited, whereas a comparatively bigger assessee who has a turnover near about 10 crore and doing transactions by banking channel, he's not required to get the audit done. So this seems to be unfair. However, I think that because of section 44AA, that is the requirement of maintenance of books of accounts, there is disparity. A smaller assessee who has option of opting for 44 AD, presumptive taxation, he also gets relaxation of not maintaining his books of accounts. And the assessee who is comparatively bigger assessee, he any which ways will have to maintain books of accounts, so his books are more reliable. So probably this is the reason there is difference between scenario D and scenario E. Moving ahead to another presumptive taxation and 44 AB if a person is carrying on profession and his gross receipts are less than 50 lakh of rupees and 50% of the gross receipts are offered as deemed income, then there is no need of getting audit done. If 50% is not offered for taxation, then audit is required to be done. Also, if gross receipts are more than 50 lakh, then also audit is to be done. The comparison of 44 AB and ADA is pretty simple. There is no concept of opt-in, opt-out. There is no concept of block that if you opt out, then for next 5 years, you cannot opt for presumptive taxation. So this appears to be happily worded, unlike 44 AB and ADA. With this background, friends, let us move to our topic, which is audit, tax audit report. First question which occurs to everybody's mind is whether a charitable organization is required to get the books of accounts audited or not. Friends, here I would like to emphasize upon the fact that 44 AB is attracted only when business is carried on or profession is carried on. Charitable activity is neither business nor profession. Therefore, the provisions of 44 AB does not apply in case of provision of 44 AB do not apply in case of charitable organizations. For charitable organizations, audit report under Form 10B, Form 10BB have to be filed, and there is no need of filing Form 3CA, 3CB, or 3CD. However, there arises a question because of Section 11(4)(a) and 7th provision of 10 for both these sections allows charitable organization to carry on business. A charitable organization can carry on some business if it is incidental to attainment of its objects and if separate books of accounts are maintained. So now we are clear that charitable organization per se will not have to get its account audited. However, the business accounts which are separately maintained are whether are to be audited or not is the question. So in this, we'll have to understand what is the nature of the business. Is the business really incidental? Is it vital for any charitable organization without which the charitable activity or the object of charitable organization cannot be achieved? Then in such a scenario, the business would be considered to be charitable in nature. For example, a pharmacy, a medical shop in a hospital. A hospital cannot be expected to run without having a medical shop into it because patients need medical supplies. So the medical shop only assists the hospital into getting it. So the business is very much incidental and very much vital for a charitable organization. So this business of medical shop would be considered as charitable activity only, and there will be no requirement of getting the accounts audited. However, if the business is not incidental, so suppose if in the hospital there is a store which takes care of attendants, they provide beds, they provide pillows, they provide beddings, they provide food, they provide leisure activities to attendants in the hospital itself, that store is not running any activity incidental to charitable activity. Without having any such store, a hospital can very well run. Patients can be cured. There is no need of such store. So this is not incidental and therefore it is pure business. Therefore, provisions of Section 44AB will apply in this scenario and we'll have to accordingly analyze and proceed ahead with doing audit or not. Tax audit report. Tax audit report is the topic for today, and the tax audit reports are of two kinds. There is a segregation, there is a categorization, and this categorization is based on one very important fact, which is few of the entities are actually required to get their accounts audited under some other law. So what 44AB says that if your books of accounts are audited under some other law, don't audit again. Just file this form 3CA, 3CD and do the compliance of Section 44AB. So again, re-audit is not required to be done. What is to be done is just filing of tax audit report. So in such a scenario, Form 3CA is to be filed, and while attesting Form 3CA, the auditor says that the books of accounts, balance sheet, PNL gives a true and correct view. It does not say true and fair view because true and fair view opinion is given under some other audit report required under some other law. Tax audit report just talks about true and correct view. Whereas for the assessees who are not required to get their accounts audited under any other law, in those cases, auditor has to file 3CB. 3CB is another form which talks about true and fair view. So the moment it becomes true and fair view, we cannot restrict ourselves to only clauses of tax audit report. True and fair view means the entire books of accounts, entire balance sheet, entire PNL. We'll have to look into all the irregularities. We'll have to understand all the allied matters, whether stock record is properly maintained or not. Are there long outstanding debtors which appears to be fishy? Are there any fraudulent activities which are taking place? Is the assessee maintaining proper supportings? And n number of things, because here the here we are expected to give a true and fair view. So, in order to discharge our attest function in the correct manner, we will have to look beyond the clauses of Form 3CB and 3CD. We'll have to actually audit the entire books of accounts and give our opinion onto it. We'll discuss in subsequent slides that we can safeguard ourselves to some extent by some reporting. Now, with this, since we have understood that there are two type of tax audit reports, our responsibility is widened in 3CB and little lesser in 3CA. However, I would like to emphasize on one more thing, that we basically report for a machine to read at the first level. Our attest function, wherein we report about lot many things into various clauses, the first person to read it is machine. And in my understanding, there cannot be any exhaustive list which can put all the assessees together, can cover all the situations, and we can just do yes or no, or we can check some box, or we can write some figure. There is always something which will differ in some assessee, and in some other assessee it will be different. So while expressing our opinion, we cannot just fill in what is provided into utility. However, there is a challenge also, because the income tax machinery under CPC, it reads our tax audit reports. So we have to be very cautious. We have to be very mindful. We have to safeguard ourselves. We have to make sure that whatever user is expecting from us is also delivered. So our tax audit report basically has to be filed with lot of thought process, because it has the direct impact on the assessee. The direct impact being there is a section 143(1), which is the processing of income tax return. Whatever we report in 3CD in our tax audit report is matched by the income tax department with the income tax form of the assessee. If there is any disallowance which is highlighted, which is reported in tax audit report, and the same is not given effect in the income tax return by the assessee, automatic adjustment takes place under section 143(1)(a) clause 4. So we have to be really mindful that every word of ours, every number which we write, has a direct impact of getting intimations to the assessee and processing. Secondly, these days, based on tax audit report, many scrutinies are also coming. I have seen many notices, and specifically when it is limited scrutiny, then a notice comes that because of ICDS reporting, your case is selected for scrutiny. Because of reporting of depreciation, the case is selected for scrutiny. So there are many notices which are flowing in because of tax audit report. So we'll have to be very mindful on it. Tax audit report basically requires us to do two things. One is to compile data. Here, we need not apply any mind. We just have to report the facts, what have actually happened. Like what amount of ESI, PF has been paid, on what date the payment was made, what is the amount of depreciation, is there any change in the profit sharing ratio, is there any change in the shareholders. So whatever factually happened, we have to compile that data and give it to the assessing officer or income tax department. So this is one part of tax audit report, and there are many clauses. Almost 50% of the clauses relates to compilation of data. However, remaining 50% requires our application of mind, wherein we have to report our opinion, that what we as an auditor think. Are provisions of 40A, 1A complied with? Is there any disallowance which has to be made? Is there any amount which is not credited to PNL but should have been credited to PNL because of Section 28? Is there need of any adjustment because of ICDS? Is there any need of making any disallowance under 14A? And lot many things where we actually have to apply our mind. And after reading the language of the clause, after reading the language of the section, we have to give our opinion. So friends, first thing, before moving to the clauses of tax audit report, I want to emphasize on this fact that we actually have to read properly what the clause is expecting from us. Whether it is asking us to just aggregate data, compile data, and provide, or it is asking for our legal opinion. Accordingly, we'll have to take the steps. Many a times, we should actually give comments in form 3CA and 3CB. So there is section on the first page, there is a table where we can give comments or disallowance or qualifications. So that section is very important for us to safeguard ourselves, and it is also important for the users, because if we write few things, we can make understand the user what actually has taken place. Because 3CD is a very checklist sort of form, wherein we have to just say yes, no, we have to feed an amount, we cannot explain the transaction. So this comment section help us. So this is something which machine will not read, and the user will actually appreciate what we actually want to say in it. So possible comments which generally we use is if we are doing audit of a proprietorship business. So there are incomes which are coming into capital account, which are actually offered for taxation, not in PGPP, however, in other head of income. So if we report the same in clause 16D, which we'll also discuss in the coming slides, then it will lead to double addition. And we can simply say, because see, machine will read 16D, it will make double addition. So what we can do, we can skip reporting over there, and we can give a comment in the 3CA or 3CB that whatever items of income which are offered for taxation in some other head of income are not included in 16D. I think I will be able to explain it better in the slide wherein we'll discuss 16D. If the GST reconciliation is not happening, input tax credit balance is not reconciled, then we can give this comment. There is no specific clause in Form 3CD which talks about it. There is no specific clause which talks about maintenance of stock records. If stock records are not maintained, then we should give this qualification, because many a times we are expected to give true and fair view in 3CB. Every time in 3CB, we have to give true and fair view. So in order to safeguard ourselves, in order to highlight all the discrepancies, we'll have to make use of this comment section. Whenever the payments are made or received through account pay, through checks, it is impossible for us to verify whether it is by way of account pay check or by way of account pay bank draft. There can be possibly two options. One, we ask the assessee to maintain counterfoils of each and every check, which probably is very difficult for every assessee. Or we can ask them to get a certificate from the bank, that please get the certificate from bank that whatever checks have been cleared or bank drafts have been cleared, they were account paid. So if we cannot get these two things, we can always in the comment section give a disclaimer that it is not possible for us to go and check whether the payments or receipts are by way of account pay check or account pay bank draft. So we should use this comment section to make our report more meaningful. Coming to the new reporting requirements. There are two clauses which are to be reported from this year. They were introduced in previous years only. However, the reporting was deferred. And from this particular year, we have to report it for these clauses also. Clause 30C, which is on GAR, and clause 44, which happens to be related to GST. So let us discuss clause 30C first. The auditor is expected to report whether the assessee has entered into an impermissible avoidance arrangement. Now, what is IAA? I will give a brief background, although it's a altogether vast subject in itself. GAR, General Anti-Avoidance Rules. GAR have been introduced under Income Tax Act, and the intention of introduction is to target sophisticated transactions which actually lack commercial substance but have been undertaken just to take tax benefit. For example, let's understand this with the example. So there are two companies. Company A is a very flourishing, very successful company. Every year it is getting new orders, it is expanding, and recently it has got an order on the basis of which it is apprehending that it will make huge profits in the coming years. And there is another company, which is Company B, which is a sick entity. Assets are very negligible. Even if they are not in good shape. The company is not doing anything. There are no profits since it's a sick company. However, the company is having huge loss base. So Company A and Company B decides to amalgamate. Now, what will Company A gain on the amalgamation? B has no assets. B will not add on to its performance. What Company A will get? Huge losses, which can be set off against the apprehended expected profits in the future. So there is no commercial substance in amalgamation of Company A and Company B. However, there is a tax benefit of set off of profits and losses. So this sort of transaction will come under the ambit of GAR. And this wheel of sophisticated transaction will be uplifted, and substance of the transaction would be seen. Under the law, there are many sections which covers GAR. There are various rules which provides that how what procedure has to be followed while invoking the provision of GAR, what has to be done, and lot many things. So if the provisions of GAR are invoked, and if it is seen that the arrangement lacks commercial substance and it has been entered only to take tax advantage, then such arrangement is called impermissible avoidance arrangement. The auditor is expected to report about these arrangements. Now, since we look into books of accounts of the SSC, we are smart people, we understand the law, we understand accounts. Legislature somehow feels that we might help them to catch hold of these transactions, which is why they have introduced this clause 30C. Here, auditor is expected to report about any IAA, impermissible avoidance arrangement, which has been entered into by the assessee. If we come across any IAA, we should report it. If we are unable to get hold of any IAA, we should make use of comment section, and we should specifically emphasize on it that the specific audit requirements which were required for understanding IAA or coming out with IAA could not be applied. We don't have access to specific books. We don't have access to few documents, which is why we are not in a position to report about any IAA. So this is one way. However, if any proceedings are in process, then we cannot just shift our onus by just giving a disclosure. So there is a long process. First, AO, assessing officer, gives notice, then he refers to PCIT, CIT, then there is an approving panel. So there are few levels wherein this GAR channel flows. So if there is any notice from any of the authority, then the auditor should be mindful of it and should give the reporting about the same, that AO has issued a notice to explain a transaction. So there has to be a reporting about it or maybe a comment about it. And if the approving panel has held a transaction to be IAA, then there has to be a specific reporting that approving panel has held this so-and-so transaction to be a IAA. So this way we'll have to see whether the assessee has entered into any IAA. If we can understand IAA, we should report it. If we are unable to understand it, we should give a comment. And we have to see whatever proceedings are taking place. We will have to incorporate the outcome of the proceedings or the development of the proceedings in our report. So this was first clause 30C. Second is clause 44. This is very much discussed these days. And clause 44, to my understanding, it will not have any direct impact on any disallowance or any income. But from this reporting, probably department wants to understand the nature of the business of the assessee, that how many transactions are entered with not registered, unregistered entities, and how many are entered into with registered entities. So basically, this clause 44 asks for a breakup of total expenditure of entities registered or not registered under GST. The first catch is GST. We have to give breakup with regards to GST. So the transactions which are outside the ambit of GST, which are neither regarded as supply of goods or supply of services, they are outside the purview of GST. They are contained in Schedule 3 of CGST Act. Those transactions are outside the purview of clause 44. So guidance note of institute has made it clear the items which are appearing in Schedule 3 are not to be reported in clause 44. So this is first important thing which we have to bear in mind. So we'll eliminate those transactions at the threshold. Now coming to the breakup. If I talk about column 2, it says total amount of expenditure incurred during the year. Now, two words are important. One is expenditure and two is incurred. Expenditure. Expenditure includes capital expenditure as well as revenue expenditure. There is no capping. So both sort of expenditures are to be reported over here. So we cannot just restrict ourselves to P&L account and jot down things from it. We'll have to see all the expenditures, revenue, as well as capital expenditure. And second word is incurred. The expenditure which is incurred. If I have made purchase, I have incurred expense. If I have taken services of any chartered accountant, assessee has incurred expenses. However, if depreciation is charged to P&L, that is not an expenditure which is incurred. So we'll have to see the expenditures which are incurred. Only those expenditures should be considered for working of column 2. So this way, we'll do total of the expenditures, revenue and capital which are incurred during the year, and that amount has to be put into column 2. Now column 3 to 6 relates to the expenditure which are in respect of entities registered under GST, and column 7 talks about expenditures relating to entities not registered under GST. So 3 to 6 will be seen together and 7 is another issue. So the entities which are either not required to be registered under GST or to whom GST law does not apply are not registered under GST. Any service taken from them, any goods purchased from them have to be reported in column 7. So what we'll do, we'll total the expenditure which are incurred during the year and goods or services are taken from those persons who are not registered under GST. So this is what has to be reported in column 7. And in column 3 to 6, we have to give details of the expenditures which are done with registered entities, registered under GST. So this is subdivided into 3 categories. Column 3 talks about exempt goods. Now, nothing has been explained to be exempt under GST. GST provides for 3 things: nil-rated supplies, wholly exempt supplies, and non-taxable supplies. So this exempt covers these 3 scenarios: nil-rated supplies, wholly exempt supplies, and non-taxable supplies. For example, supplies of alcohol, supplies of petrol, supply of transportation service except GTA. So we'll aggregate all sort of these expenses and we'll put it in column 3. In column 4, the amount which is incurred during the year with an entity which is registered as a composition taxpayer is to be reported. So GST law allows a person to be registered as a composition taxpayer, and whatever services are taken from or whatever goods are purchased from such person are to be totaled and reported in column 4. Column 5 is a residuary column. Whatever will not qualify for column 3 and column 4 will fall in column 5. So whatever services are taken from a registered entity, registered under GST, if they are not exempt and if it is not from the person who is registered as a composition taxpayer, then it will have to come under column 5. Column 6 is very simple. It is total of 3, 4, and 5. So whatever is the total of 3, 4, and 5 has to be reported in column 6. However, I wish to highlight one thing. All the columns talk about expenditure incurred, but column 6 talk about total payment to registered entities. To my understanding, and in fact, as per the guidance provided by the guidance note of institute, payment will include the expense payable. So whatever expenditure is incurred has to be reported. It is not just restricted to payment. So this way we'll feed 2, 3, 4, 5, 6, and 7. One thing which has to be kept into mind and which institute has also highlighted by way of guidance note is that total of 6 and 7 should be equal to 2. So our reporting should be in such a way that the supplies from registered entities and supplies from unregistered entities should be equal to the total expenditure incurred during the year. Whatever will not fall into GST, which is outside the purview of GST, like services, payment for wages and salaries, it will be outside the purview of clause 40. Now, this clause is applicable from 1st April 22, the reports which are issued after 1st April 22. Our clients were not ready for this to come. So many of my clients, at least, they are saying that we are unable to aggregate this data. In such a scenario, when assessee is unable to provide us this data, we can give a disclosure, we can give a comment in 3CA or 3CB as the case may be. I've written also this language which is appearing on the screen, that we are informed that whatever software the assessee is using is not configured to generate the requirements of clause 44, which is why we are unable to verify the same. So this can be one scenario where the assessee is unable to give us the details with regards to clause 44. If the assessee is in a position to provide us details with regards to clause 44, we should do a test check. If they qualify, we should give reporting over here and we should move ahead with this clause then. Okay, so these are the 2 new clauses which are to be reported from this particular year and which are to be taken care this year. I have also collected few clauses which I think are related to new Schedule 3 and CARO 2020. Lot many changes have come in Schedule 3 and CARO 2020, and a lot of disclosure requirements are needed, which are difficult for assessees to aggregate and which are difficult for us to verify. So some sort of linking I am able to make. I'm talking about 4 clauses here. The first one is with regards to clause 36A. So Schedule 3 of Companies Act asks a company to give disclosure with regards to loans and advances given to related parties, directors, KMPs, and promoters. So there is section 185 of Companies Act, which imposes lot many restrictions of giving loan to a director. So there is a specific reporting requirement in Schedule 3. Likewise, there is a section under income tax, which is section 222E, which talks about deemed dividend. So if a shareholder of a company in which public is not substantially interested receives any loan from such company, such loan or advance would be termed as dividend up to the amount of accumulated profits. And that dividend would be taxable in the hands of shareholder. Now, if we are filing tax audit report of shareholder, we are required to do reporting in clause 36A, because here we'll have to report whether the assessee has received any dividend in the nature of deemed dividend. 222E is deemed dividend. So how will we come to know this thing? The reporting requirement under Schedule 3 is of the company, and we are doing audit of a shareholder. So Institute has also guided us on it. This is not a new clause. However, this was introduced recently. The earlier guidance note was not having any guidance onto this clause. So by way of this guidance note, which has recently come, Institute has given guidance onto how to go about it. We will have to take certificate from the shareholder as to in which company he is holding not less than 10% of the voting power, and also the ledger accounts with regards to loans and advances. Based on it, we will analyze and we can see whether there is a issue of deemed dividend or not. If we feel that deemed dividend might come into picture, we should immediately check Form 26AS. Dividend is no more exempt. It is taxable now. And there is a TDS requirement also under Section 194. Company will have to deduct TDS while giving dividend. So we'll have to see Form 26AS. If we find that there is a deduction of tax on account of dividend, then we'll have to report it over here. If there is no TDS, then still we'll have to apply our mind and see whether it can qualify for deemed dividend or not. And accordingly, we'll have to give the disclosure and we'll have to do the reporting. For calculating the amount of deemed dividend, we'll have to know the accumulated profits on the particular day when the loan was given. So for that, we know that the shareholder is holding more than 10% of the voting power. So he has all the rights to ask the company for the details. So we'll have to ask the shareholder to get the details from the company, and accordingly, we'll have to do the calculation. One thing which is important to note here is that the commercial transactions are not considered to be deemed dividend. So if a shareholder and a company on regular basis make sales and purchases with each other, then they're commercial transactions. They are in the trade, they are the transactions of trade in nature. So that will not be covered under deemed dividend. So the provisions of deemed dividend will have to be seen. I think this clause is very underrated. Many people skip on this clause. My intention was just to highlight the importance of this clause, that we'll have to look into this clause also. So this is one which I could relate to Schedule 3. Second is the disclosure requirement with regards to the quarterly statements filed with the banks and books of accounts. So the company who has taken some borrowings from loans and financial institutions against some security of capital asset, be it stock or debtors, they have to furnish quarterly statements or monthly statements with the bank. And in Schedule 3, they have to give disclosure whether the quarterly statements submitted are in agreement with the books of accounts. And if there is difference, then disclosure has to be given with regards to reconciliation. And if it cannot be reconciled, then there has to be the reason for discrepancy. So in the financial statements, as per Schedule 3, this disclosure has to be given, which we will audit. Now, Form 3CD or our tax audit report specifically do not talk about this sort of disclosure or do not have any link with this thing. We just report the amount of closing stock, quantities of goods traded, or WIP, raw material, and all in Clause 35. So the closing stock as per books of accounts will very well match with whatever we are reporting in Clause 35. So apparently, there is no disconnect. But friends, I would like to highlight here that if our quarterly statements are not in agreement with books of accounts, if we cannot reconcile them, if there are material discrepancies, then our books of accounts can be rejected by the AO. So this becomes very important. Some disclosure in Schedule 3, which is Companies Act disclosure, will have bearing on the income tax also, because it can lead to rejection of books of accounts. So we'll have to be very mindful while making reporting in Schedule 3 and while filing our tax audit report. Whatever we feel should be disclosed in tax audit report, we should make use of comment section, observation section, and we should just write it so that we can explain it in future. Next, I could think of is Clause 22, which is related to MSMEDs. This is a very old clause. And from this Schedule 3, there is a requirement of a big disclosure. A very big table is there in Schedule 3 now, wherein we'll have to give details of what payment is due, what amount of interest is due from MSMED, what payment, what expenditure was incurred, etc., etc. And I have seen lot many 3CDs having one line that we are not informed by the vendor whether he is registered under MSMED Act or not. So now, if there is a disclosure in Schedule 3 having lot many details, we cannot just write this line in the report that we are not informed by the vendor. Both the reportings will go hand in hand. Whatever we are reporting in Schedule 3 will have to be consistently reported in 3CD also. The last, which I could relate to Schedule 3 and CARO, is disclosure of ratios. Schedule 3 requires probably 11 ratios, and 3CD also talks about 4-5 ratios. Numerator, denominator in both Schedule 3 and 3CD are different. Ratios are different. We are human beings. We can do errors. We should be just mindful that whatever is required under Schedule 3 should be properly reported in Schedule 3. It should not be mixed with from 3CD. And whatever is required in from 3CD has to be properly reported over here. So these are the 4 clauses which I could relate to the new reporting requirements under Schedule 3 and CARO. Moving on to important clauses, which appears to be important to me, which have direct bearing and based on which I have seen scrutinies and I have seen issues in processing in the previous years or in last few years. I'll be discussing on them. First is clause 13, which is section 145.2, which talks about ICDs, income computation and disclosure standards. Friends, we all know that books of accounts are to be maintained as per accounting standards or index, whereas the income has to be reported as per income computation disclosure standards, ICDS. If I talk about AS, broadly AS and ICDS are same, and a very few differences are there. Such differences lead to increase and decrease in profit, meaning thereby the income which is in the books of accounts has to be tweaked. It has to be made ICDS compliant and accordingly has to be offered for taxation. So I will discuss a few examples of differences. And if there is a difference, if there is increase and decrease in profit, then the same has to be reported as adjustment in clause E here in 13E. Although I am just covering 3 or 4 of them, but there can be many. And if I talk about India's scenario, there are many differences. So we'll have to see. So just for the purpose of understanding, I am discussing 3 of them. One is retention money. AS7, which is construction contracts. It has no specific guidance with regards to retention money. And when we see AS9, we do not include retention money into the revenue, contract revenue, because we feel that there is lack of reasonable certainty whether this amount would be ultimately collected or not. So we refrain ourselves from including retention money into the contract revenue. However, ICDS, on the other hand, specifically provides that retention money will form part of contract revenue. So in the books, we have some other revenue. As per ICDS, we have increased revenue, which includes retention money. So there is difference in profit. That difference will have to be adjusted and will have to be reported in 13E. Similarly, if I talk about government grant, when received, is not to be recognized even in the books of accounts if there is no assurance, reasonable assurance that the conditions attached thereto will not be fulfilled. So there can be a scenario where grant is received in advance. However, in future, the assessee will have to make compliance to certain conditions. So unless there is reasonable assurance, AS doesn't allow for recognition of government grant. However, that is not the case with ICDS. ICDS says the moment grant is received, it has to be recognized as income. This is not only contained in ICDS, it is also contained in 145B3, which is a recent amendment, and Section 224, income also. So again, the government grant which is not recognized in books of accounts is recognized as per ICDS, and there is difference in profit and loss. Accordingly, the difference has to be reported. Securities. If security is stock, cost and NRV, whichever is lower, has to be considered and accordingly has to be recorded. While maintaining books of accounts, we do it script wise. Okay, I have shares of Reliance. This is the cost of share. This is NRV of shares. Cost or NRV, whichever is lower, I'll take that. Okay, I have another script, which is HDFC Bank. I will again do cost or NRV, whichever is lower, and accordingly report and account for. However, ICDS talk about category wise. It doesn't talk about script wise. It talks about category wise. All the equity shares will be clubbed together. Total of cost, total of NRV will be compared, and accordingly it will be taken into consideration. So this will result into either increase in profit or decrease in profit, and accordingly we'll have to give effect of it in 13E, clause 13E. Friends, this reminds me of one disclosure which I have seen about depreciation. I have seen few tax audit reports wherein adjustment of depreciation is also done in ICDS. Here, I would like to submit that ICDS is different and Section 32 is different. Although they both talk about the same thing, whatever is provided in Section 32 is also provided in ICDS. It simply borrows it. But there is a specific clause for 32. So whatever adjustment is required on account of depreciation has to be reported in clause 32 and not ICDS. I have seen few scrutinies to get triggered on the basis of ICDS, and the reason was depreciation. So we can avoid reporting in this ICDS general clause, and we can report better into clause which is specific for depreciation. Next clause, which has become important really these days, is clause 21G. This is particulars of any liability of contingent nature. Many people from years have been reporting into this clause, and everything was fine. Never ever any adjustment came. But from past 2 years, because of reporting in the same fashion, in the same clause, adjustments are being made in 143(1) and demands of crores of rupees are coming. So let us understand about this clause also, because this has become important these days. What has to be reported into it? The liability which is of contingent nature and which is debited to P&L. It does not cover the contingent liability which is shown into notes of accounts, which is not forming part of balance sheet, but it is a line item below balance sheet. The contingent liabilities, which is a line item below balance sheet, is not to be reported. The contingent liability which is debited to P&L, only that has to be reported, nothing else. So if a line item is reported in 21G, then machine will read it as if this is the liability which is debited to P&L, which should not have been allowed as expenditure, and it will make a disallowance, leading to a demand and huge liability which will be payable. And by way of this new guidance note also, Institute has clarified that the contingent liability shown in notes to accounts is not to be reported. So we'll have to be mindful with regards to this. Next is clause 25, which is section 41. This is also a very old section, old clause, no change has come. However, these years, because of machine reading, many problems are coming into this clause also. This talks about liability which ceases to exist, has to be reported. So first thing which is important to understand is that section 41 covers only those liabilities which were claimed as deduction, which were claimed as allowance in any particular previous year. If no allowance was made, if no deduction was taken, and if that liability ceases to exist, there is no requirement of any, there is no, the provisions of Section 41 cannot be invoked. And this is also held by Supreme Court in Mahindra and Mahindra case. So we should not report, we should not invoke the provisions of Section 41 for the liability which has never been claimed as deduction. Second is, every income has to be offered for tax only once. If income is already offered in any particular previous year or any prior period, it should not be considered again and should not be made part of Section 41, and again should not be brought to tax. So this is also important to understand. There is a confusion on this regard also, that if there is a debt and it has become time barred because of Limitation Act, then the liability ceases to exist. The person has not come to us, it is time barred. There can be a scenario wherein the assessee will not pay it. But this per se will not lead to the finding that the liability ceases to exist. Only if it actually ceases to exist, then only provisions of Section 41 will come into the picture. So friends, these three things have to be kept in mind. Now, what machine is doing these days? We as auditor, while doing audit, we make sure that whatever income is to be offered as per Section 41 is credited to P&L. The clause is silent. It just says that liability, it is not saying about whether credited to P&L or not. The guidance note of institute also says that the tax auditor has to report irrespective of the fact whether it is credited to P&L or not. So everybody, even if this liability was offered for tax, it is credited to P&L, it is still reported in clause 25. Now what machine is doing? Machine is considering that this liability is not forming part of P&L, it is not credited into P&L, and it is making an adjustment. So one liability, one income is taxed twice. So my suggestion is, if the amount is already credited to P&L, please don't report in clause 25. It will result into double taxation. Reporting has to be done only and only if it is not credited to P&L. Next is clause 16A and D. Before that, I would just like to know how much time I am having. Can I continue?
Still 5 more minutes.
I could not hear you.
We have 5 more minutes now.
Okay, sure. Thank you. So talking about clause 16, I'm covering A and D only. It talks about items falling within the scope of 28 and not credited to P&L account. Basically, there is a confusion that the items which are not credited to P&L, which are maybe credited to capital account, should be reported here or not. If I am doing audit of a proprietorship concern and there is capital gain income, there is rental income, that is not credited to P&L, but it is a income. However, it is not falling under clause 28. So that is not to be reported in clause A. Clause A those incomes which are falling under 28. For example, any benefit perquisite arising from profession, and recently there is a liability of TDS also onto it. If inventory is converted into capital asset, then the fair market value of inventory, which we generally skip while maintaining books of accounts and while reviewing books of accounts. So these type of line items will fall into clause A. Clause D, any other item of income. Here also, the rental income and the capital gain income, which is finding mention in capital account, will not come over here, because this talks about any other item of income in the nature of business, not any other line item. So like I mentioned earlier, in the comment section, we can give a disclosure that the income which is credited to capital account and which is not falling under PGBP is offered for taxation under the relevant section, under the relevant head, and we should not report under 16D, because reporting in 16D is leading to adjustment. Rental income is otherwise offered for taxation. If it is reported in 16D, machine reads it as if it was to be again added. Double taxation of same income is taking place. Now, what has to be actually reported under 16D is the incomes which are from business, which are maybe not in the scope of 28, but they are income. So whatever employee contribution is received by the employer, and if the same is not deposited with the respective fund within the timelines of those respective funds, then that becomes income of the employer. That has to be reported here. And it has to be cross-referred with clause 20B, wherein we give details of all the challans and the amounts. A dealer of immovable property, and the transaction which happened was at some other value, and the stamp duty value of the property was different, and the difference was more than 10%, then also it is a business income, not in the ambit of section 28, but it is a business income which has to be credited, so it has to be reported under clause 16D. I believe here most of the people are making errors, so we have to be little mindful of it. Clause 21A, section 37, it is very simple section, talks about the allowability of expenditures, and it is a residuary section. We have to report expenses of capital nature which have enduring benefit. So capital nature is not defined under income tax. There are n number of decisions laying down n number of tests that what will amount to capital expenditure and what will not amount to capital expenditure. We'll have to apply all those tests, apply our mind, and report over here. One common error which people are making is preliminary expenses. Preliminary expenses are in the nature of capital expenditure, so they have to be reported over here. Second category is expenditure of personal nature. Whatever we feel that this is on account of personal nature, then we'll have to report it over here. Third is expenditure incurred at club. Now, here a confusion arises. If the club expenditure is incurred for business, whether it should be reported here, yes, it has to be reported here. But if it is incurred for personal purposes, then it has not to be reported in the third line item. It has to be reported in second line item, that is expenditure of personal nature. Then the last thing is expenditure by way of penalty or fine or violation of law. Friends, here I just want to emphasize that the penalty or fine which is compensatory in nature is a allowable expenditure. It is not to be reported here, but if it is penal in nature, it is not allowable. Giving bribe is not allowable. However, making payment of any ROC fees, which is compensatory in nature, is allowable. So we'll have to apply our wisdom and accordingly report. I'm skipping on to these sections and these clauses, which are 40A3 to 69 SST. Basically, what I want to highlight here is that these days, department has also understood the new era of doing transactions. New era of doing transactions, meaning apart from cash, apart from account pay, check, and bank draft, there are few other modes which are allowable. And there is a rule 6 ABBA, which lays down a list that UPI, Bheem, net banking, RTGS, and lot many are allowable modes. So if any expenditure is incurred by such mode, then 40A3 will not get attracted. If any loan is received by such allowable modes, then 269 SS will not apply. If any loan is repaid by such modes, 269T would not apply. If amount is exchanged, if amount is received of more than 2 lakh rupees by way of Bheem or net banking, then also provisions of 269 ST would not apply. So this is just one thing which is incorporated in 3CD, and guidance note also provides for this guidance that these are allowable modes and no action has to be taken with regards to this. So there is no requirement of any reporting into it. So friends, this was all from my side. Because of short time, I could cover this much only. However, if there are specific questions with regards to other clauses which I have not covered, then I am open for them. Sorry.
Thank you so much, Shivani, for giving a deep insight on the required and relevant process of taxonomy. In covering the topic in such a stipulated time, we very well know that the particular clauses cannot be covered in so less of time, but still we have recovered it in a very simplified and lucid manner. And I believe many of the issues must have been resolved today. Thank you so much for sparing your time and enlightening us. There are a few questions which I would like to read. The first question is, under section 44 ADA, what is the basis of estimation of professional receipt? And what is the basis of estimation of expenditure? As we have to arrive the figure at estimated.
Could you read the question again? I think there is some network error at my side.
Under section 44 ADA, what is the basis of estimation of professional receipt up to rupees 50 lakh? When we are not maintaining books account, how can we derive at this figure? Is it like how to determine the amount?
So, I understand. See, there is some error. I don't know whether I am audible properly or not, but I understand the question is how to compute 50 lakh rupees of gross receipts in case of profession. Is this the question?
This is the question.
So there is no requirement of maintenance of books of accounts. However, one will have to maintain record of receipts. What is received is to be maintained. One can skip over accounting expenditures on daily basis, but a proper register with regards to receipts have to be maintained, because that is the foundation for reaching to 50 lakh of rupees. So that is very much required. Even assessing officers can ask us to provide the same. That has to be maintained by all the assessees who are opting for presumptive taxation. So they are not required to maintain the entire books, do all the exercise, maintain balance sheet, P&L and things like that, but they have to maintain this specific receipt register.
And similarly, it is asked how to determine 50% expenditure in the same case.
Could you please put these questions in the chat box? I cannot hear you.
Yes, I think Alka, your voice is breaking. I cannot hear you as well.
Is it audible now?
Yes, we can hear you now.
What is the basis for 50% expenditure? Or same case, 44 ADA.
What is the basis of calculating expenditure?
Yes.
So, see, there are two things. One can just say that I don't want to compute anything, and I will pay 50% as deemed income, and I'll pay tax on the same. But that is not the scenario as such. A common sense test has to be applied. So if I'm a chartered accountant, I'm getting all the receipts via banking channel. I am not withdrawing a single penny out of it. There is no expenditure. After receiving maybe 1 lakh rupees, I have just withdrawn or I have just expended 1,000 rupees. So nobody can say that the expenditure which I have incurred is just 50%. 44 ADA provides that the deemed income would be 50% or any sum higher. So in this case, the income is not 50,000, but it is 90,000. And whatever is available on record, the basic things, even if I'm not maintaining books of accounts, I'm still having bank account. So with the help of the bank account, it will be seen what is the income, and AO can very well dig into it, ask for certain details. He can always question, okay, if you are saying 8% and we understand it, if it is 50% and we understand it is more than 50%, then at least provide us the supporting documents. We don't ask you to maintain ledger accounts, but provide the bills. So that has to be kept in mind, that this 50% is not just 50%, it is 50% or higher amount. Minimum of 50%.
Thank you so much. Next question is, what is excluded from clause 44 by ICAI as per guidance note? Please explain again.
Clause 44 is to be explained.
Yeah, she wants what is excluded from clause 44 by guidance note.
Items which fall in schedule 3. So there is a list of CGST Act with the name Schedule 3, and there are few line items. They are excluded from clause 44. So while working for clause 44, we should always have list of Schedule 3 in our hands. One example is services by employee to employer. So that is excluded. Basically, in short, I can say Schedule 3 has to be seen because the items which are listed therein, the transactions which are listed therein, are neither supplies of goods nor supply of services.
So much. One more question is how to deal with the provisions for reporting in clause 44.
I cannot hear you,
How
Alka.
to deal with the provisions made in the PA.
How to deal with the
Provisions.
So provisions are not allowed as expenditure. Only if provision is on account of a certain liability, then only it is allowed as expenditure. If it relates to uncertain liabilities, it is not allowed. So for example, if a company makes a provision for warranty, it is a certain liability. It is based on some calculation, some previous working and things like that. So it will be allowed. So provision for warranty would be allowed. However, if I make provision blanketly that I might provision for bad debts, for example, so that is unascertained, it will not be allowed as expenditure.
For example, provision for audit fees. We very well know that is going to be RD, right? In that case, we should report it in the RD, registered dealer, right? Am I not audible?
I can't hear you. I'm sorry. I don't know whether there is problem.
Yes.
Or what you can do, you can also switch off your video.
Am I audible now?
Yes, I think it was the
back.
headphone. It's better without them.
My question is how to report provisions for audit fees.
How to?
Provision for audit fees. Audit is going to be surely for RD, right? Registered dealer. So should I report it under registered dealer or URD?
Okay, provisions with regards to clause 44.
Yes.
Okay, so clause 44 talks about the expenditure incurred.
Yes.
And if there is a provision because of past obligation, and you have taken services from some entity, that entity is registered or not, accordingly you'll have to deal with it.
Okay. Next question is what is whether TDS is applicable to Ardiyas under section 194Q?
Whether TDS is applicable to
Ardiyas.
Arathiyas.
Yes, under section 194Q.
See, 194Q altogether is a different topic, but it talks about purchases made. I think it's a separate topic. I will have to
Actually,
deal it separately.
You can skip it. Okay, fine.
Yeah,
You can skip this
let's skip
topic.
this question.
What is meant by turnover for the purpose of section 194Q?
Turnover for?
Section 194Q. What is the definition of turnover for section 194Q?
I could not
Whether
hear
it is
you.
including GST or whether excluding GST.
What I could understand is what is the limit of turnover for 194Q? Will it include GST or not?
Yeah, including GST or excluding GST.
So 194Q is applicable on the buyer.
Yes.
If the buyer has turnover of more than
10 crores.
10 crore or 2 crore rupees
10
in the
crores.
previous year, then he'll be considered as buyer. Now, inclusion of turnover, inclusion of GST in turnover or not would depend upon the nature or the method of accounting followed. If it is inclusive method, then of course you'll have to include GST in the turnover. If it is exclusive method, then no adjustment is to be made. The turnover would be excluding GST. So it completely depends upon the method of accounting which is followed.
Okay. Thank you so much. We have covered almost all the questions. And
Thank you.
so much. Now I request CA Preeti Sangoi to please introduce before us our second speaker.
Thank you, Alka ma'am. Good morning, good evening, our dignitaries, our speakers, our beautiful ladies out there who are very successful in their life. First of all, I want to introduce CA Moshin Mishra ma'am. She has a 10 years of experience in project management and implementation. She, along with his management and doubling his team, has achieved highest business growth and strong change management experience with high performing team members. She is a chairperson of ICI in Lucknow branch. She personally loves enjoying every moment of life with curiosity. She always try to experience something new as it gives in his profession, as it gives him energy to grow more in his field. She strongly feels in empowering women and educating them so that every woman can grow and sustain in their life. So she also tries to spread awareness relating to this. Today, our learned speaker is going to speak on the topic strength your emotional ability, and which is very necessary as a professional woman in our life. So I am handing over the mic to CA Moshin Mishra ma'am. Ma'am.
Thank you, Preeti, for a kind introduction. I hope I'm audible. Just give me a thumbs up if everyone can hear me. Nice. So let me quickly tell you guys that I'm Mosmi Mirza, and I am going to talk about how to strengthen our emotional agility. The concept is fairly new. It has recently come up after years of research by the learned scholars, and it is one thing that I can tell you about is that when practiced on a day-to-day basis, it does lead to a more successful life, not just professionally but also personally. So quickly starting with the presentation. Let me know when you guys can see the presentation so that we can start. Preeti, can you give a thumbs up? Oh, thank you so much.
Yeah.
So what are we going to cover in today's session? What is what's the agenda? What's the aim of today's session? We are going to learn about emotional agility, common happiness. So there are a lot of myths that are going around nowadays. So we are going to debunk those and also go through some of the steps that we can follow in our day-to-day life to strengthen our emotional agility. So basically, what is emotional agility? Emotional agility is a process that enables us to navigate life's twists and turns with self-acceptance, clear-sightedness, and an open mind. The process isn't about ignoring difficult or sad situations or emotions or thoughts. It's about holding those emotions, thoughts loosely, facing them with courageously, compassionately, and then moving past them to ignite change in our life. So it is learning to be mindful, to be intentional about the feelings that we are going through, about the emotions that we are going through in our workplace life and in life. So what is the aim? The aim of emotional agility is to manage, even leverage our emotions to move forward in our workplace and in our relationship, basically converting our emotions into our strength. So often we see that when we talk about emotions, especially as women, when we talk about emotions, we are seen as a weakness. They're seen as as something that we're not happy about experiencing. The way society has made us feel, if someone is calling us emotional, that it means that it is our weakness, which is not true. So here's a small video about what emotions are and how we should be actually viewing them. This is not my video. I've chosen this from YouTube. I hope you enjoy.
What are emotions and how do they work? Emotions are often feared and avoided because they are so painful. So why focus on emotions? Because emotions give you important information and tell you whether things are going your way. Emotions help you to survive by providing an efficient, automatic way of responding rapidly to important situations. Emotions help you to relate to other people and the expectations and demands of life. Emotions tell you what you need. When you know what you need, you can take action to meet those needs. Emotions also communicate what you feel. You learn your emotional reactions through experience. All your negative experiences can turn into a big, black, and scary feeling inside. You learned many of your emotional reactions long ago. Your black shadow will therefore sometimes resemble a person who hurt you in the past. But your emotional experience and reactions can always be changed or altered. First, you need to know something about what your emotions are. You have different basic emotions, some of which arouse you and some that calm you down. These are shame, fear, sadness, anger, disgust, happiness, and surprise or interest. You have more unpleasant emotions than pleasant ones. That means you often suffer quite a lot, but that's because the unpleasant emotions help you survive. Feelings also tend to be more unpleasant if you fight them. If you allow them to be there, they become less unpleasant. You can experience and express many different feelings, like feeling hopeless, irritated, anxious, excited, lonely, embarrassed, suspicious, content, and so on.
So basically what we learned from the video, what is the takeaway? That there are emotions, there are the millions and zillions of feelings that we feel every day. And not all emotions can be a happy emotions or a good emotions. Sometimes we feel sad, sometimes we feel threatened. And those emotions also form part of our personalities and they're part of our experiences that help us grow and navigate life. So what basically when you view emotions to an angle that gives you strength, that allows you to understand that not all emotions are bad, and having being emotional, even the bad ones, even the difficult ones, it is essential to the very existence. Uh, it is essential to our very existence. So what then coming back to the topic, like what's emotional agility? It is an ability to come to your inner world, your thoughts, your emotions, experiences, self stories, courage, compassion, and view these experiences through curiosity, courage, and compassion. Instead of these inner experiences holding you hostage, instead of know these experiences and emotions, the feelings that you're going through, clouding your judgment, clouding your actions, you learn from them. You evaluate the situations you face. You are clear about the goals, about the values with which you want to move forward. A critical mind skill set that allows you to make real change in life, both at work and at home. So it is important to understand what pyramid we are. Where are we in terms of our emotions? Recently, the way the world is developing, wherever you open, wherever you log in, like you log on your Instagram, you are faced with this, which I call it a happiness movement. Everybody's is happy. You log into Facebook and everybody's posting good things. You log into any social media. You open your television. You watch movies and all these things. What are these things telling you? These things are telling you, oh, don't worry, be happy. No, be positive. And happiness is a choice. So all these things. So I'm not saying this is wrong. This I'm not taking away anything from the movement that is going around, that no, being happy is essential. In fact, if I were to say that being happy is a universal wish, but what I'm trying to say is that there are certain myths around it, that don't worry, be happy. No, this is the first myth that I want to debunk today. Like research shows that people who focus too much on happiness and become less happy. Like it's okay, that it's okay to be sad. It's okay to have disappointments. When we have expectations, then we are also bound to have disappointments. these myths, the social media agenda, the social media perception makes us feel guilty about being unhappy. Why is this happening only to me? Why am I the only person who's unhappy? Instead of us realizing that happiness is is essential, but so are the sad feelings, so are the difficult situations, because those situations go a long way into shaping a personality, into no in into go a long way into helping us grow as an individual. Happiness, often I hear that happiness is a choice, right? As if as if we can choose to be happy. Yes, we can choose to be happy, but reality is the reality is that happiness is impacted by variety of factors. No, it's some of those factors are within our control. Some of those factors are not in our control. What no what separates us is that understanding that there are situations where we can't be happy, that there are things that we need to do to be happy, and also making us developing a sense of empathy for the society and for others. Like, what can I do in a particular role to support the happiness of those around me? Just think positive is another myth that that we are facing right now. That okay, just be positive. Difficult situations will happen. No, difficult experiences can pass. So positive thinking can transform into magical thinking, and things will become change. This often promotes victim sense of that she or he is being blamed for the situation. Like, if I am unhappy, if things are not going to my in my favor, that I'm being negative, that it is upon me to be positive. But not every time we can be positive, right? We have difficult situations in life which face us. Like it is really emphasized, the amplified and echoes of being positive are being heard by the social media, and it tend to be the it's just forcing us to be our happiest self. We're fast becoming a culture in which being unhappy is a taboo. At the same time, the pro-driven self-help industry promises that the lasting happiness is just a click away, or okay, we can just reset ourselves and we can have real happiness. Isn't always in a state of grinning, right? It's not always about smiling, laughing. It cannot be mixed. It cannot be unmixed with suffering. Like, there are parts that there are situations, especially as a society, as a world, we together went through the 2 years of pandemic. There is not an individual right now that who has not experienced loss in last 2 years. It is a paramount important to acknowledge that yes, we went through a difficult phase. I have suffered emotional loss. I have suffered a loss of that is very personal to me, a loss of a dear friend, a dear family member, a colleague, a spouse. A lot of losses a lot of loss we saw, and a lot of sufferings we saw in past 2 years. Therefore, it is important to understand that happiness cannot last forever. No, there's a bell curve. Like, as a chartered accountant, we know that there are ups and there are downs, and those are part of our well-being. Happiness is a lifelong process of making sometimes difficult, well-driven choices, experiencing emotional ups and downs, and incrementally, like, choosing every day to move in that direction. Sometimes acknowledging that no, that there will be negative thoughts as well. So, having said that, we feel, how do you know how do you understand that our things behave, and our thoughts, our feelings, our emotions, and behaviors are all intertwined? Like, what we think we become, and what we become we behave. So it is important to know that what are, like, in a difficult, when you think of a situation or a relationship, what thoughts arise for you as you focus on it. Focus on one particular feelings. What feelings surface? Try to be specific. Try to label them. Try to understand, okay, why. And then what you typically do, be are you that a behavior that is a result of certain feeling, or certain certain actions that you do when you feel those things. I can tell you that it is often what happens is that we fall in a patterns of feeling. like it happens to me. I don't know if it I don't know, as a working mother, sometimes what I feel is that I'm not giving my kids enough time, that I need to focus more on my ch- children. Every week when I've had a long day at office, when I've worked really hard and I have achieved something at in my office after putting in hours of work and effort, I do feel guilty about the time that I have taken away from the kids, from my kids, and put in into my office work, and it makes me feel guilty. I can fall into a pattern of sadness. And so that's what is important to understand. When you are getting hooked onto an emotion, that is not good for you. We have to get ourselves unhooked. So how do you do that? The first step to developing emotional agility or developing emotional strength is to understand that you and acknowledge that you are getting hooked, uh, hooked by your thoughts and your feelings, and you're becoming rigid and you're becoming repetitive. Like, I have seen so many of my friends who are practicing chartered accountants, thinking, okay, I'm doing so much effort in my firm. Maybe I was smart enough. It would have been a better choice if I had gone into a job, or a colleague who is doing a job, and she continuously feel that should have chosen practice over job. So these thoughts start becoming repetitive, and then what happens is that they start impacting your day to day life. That you're not happy in doing the work, you are not focused, you are not good to your colleagues, because you are hooked, and you have fallen into a pattern of emotions. So getting unhooked is our step number one. We have to get once we fall into a trap of reruns of feelings, rerun of our past experiences, you have to understand, you have to stand up and tell yourself that yes, I'm getting hooked. This is my and I will have to initiate a change here. So how do you really get unhooked? Is you recognize your pattern. The first step is to notice that, okay, these are my thoughts and feelings that become repetitive. It's hard to do. It's hard, but you have to recognize your own telltales. There are telltale signs which only you can identify. One is that, so one of the telltale sign is that your thinking has become rigid, that you're continuously thinking on one thing, and it is becoming repetitive. And when you have these reruns, when you have these uh, thoughts which are becoming uh, continuously coming to you, you have to start labeling them. Okay, how do you label them? Okay, you have to give attention to your thoughts and feelings that crowd your mind. There's no room to when no when they are continuously coming back to you, it becomes difficult, like to label them also, because it's so much crowded in your mind. So one strategy is that you see a situation more objectively, is simply by calling a spade a spade. Okay, for example, let's take an example. Say you are stuck in an emotion wherein you say that I'm not very effective at my work. I'm not very effective at work. I'm not doing well at work. I'm not doing well at work. So the constant thought, how do you label that thought? You label it by saying, I'm having a thought that I am not doing well. No, you see how it changed from I am not doing well to saying I am having a thought that I am not doing well. Sometimes we feel our co-workers are not letting, a co-worker is giving me a tough time. My co-worker, and I feel that, oh, she's just giving me a tough time. My manager is giving me a tough time, or client is giving me a tough time. So how do you label that thought? You label it by saying that I'm having a thought that my coworker is giving me a tough time. And then labeling allows you to see your thoughts and feelings for what they are. Sometimes, so our feelings and thoughts are what? It's just the data that you need to analyze. So when you remove yourself from a situation, you are able to, you are able to analyze the data that your mind is presenting them. Humans are psychologically able to take this helicopter view of private experiences. Mounting scientific evidence shows that simple, straightforward mindfulness practice like this not only improves behavior and well-being, but also promotes beneficial biological changes in the mind and in a cellular cellular level. So what I mean by saying is that once you remove the dense fog that your mind is has engulfed into, you are able to see the situation better as a human. As it's very natural for us to be able to do that, and there are several studies that support support there are several studies that support this logic, that over a period of time, your mind cells grow, and being happy is also conducive, and being mindful not is also conducive to our actual health, actual physical health as well. So what happens is that once you are able to label your thoughts, you can accept them. We cannot control every act, every feeling, every thought that we have. It is not humanly possible. But the opposite of control is acceptance, not acting on every thought or resigning ourselves to negativity, but responding to your ideas and emotions with an open attitude, paying attention to them, letting yourself experience them. Take 10 for example, when you're getting hooked, it's like embrace your thoughts. Give your thoughts the attention that they need. Take breath, letting go of the control. It's essential to understand that I cannot control this situation. I'm going through this situation. I am going through some difficult time. I will give myself the time to heal it needs. This belief can bring relief, and it won't necessarily make you feel good. It's not like you'll start feeling good, but you will realize that how upset you really are. An important thing is to show yourself some compassion, know, and examine the reality of the situation. What's going on both internally and externally? There are signals that something that are important. Once you begin to notice your inner self, once you acknowledge your feelings, then you are able to notice what's truly happening to you. Instead of no yelling at people because you're upset, or instead of acting on your anger because you are going through an emotional breakdown inside, you are able to remove yourself, analyze yourself, and take the break you need, ask for the assistance that you need, and often clear your mind of the actions that get impacted through your behavior and through your emotional. Once we are able to remove ourselves from these situations, once we are able to be mindful of the feelings that we are having, we are able to act on our values. Now the third step is to act on your values, not act on your emotional outburst, not act on a feeling or a thought. So once you're able to unhook yourself from a difficult thoughts and emotion, you expand yourself. You are able to see the options that you have in front of you more clearly. For example, like I have a colleague that is really, really upset over the manager's response to the latest deliverable that the person submitted. He thought that he did a good job, but the manager is not giving a positive feedback, and he's getting upset about it. He's thinking about it and thinking that the manager holds a grudge against him, and he's so engrossed in his thinking that he often fails to see the positive feedbacks that were received. So once he's mindful of the experience of the emotions that he is having, he can examine the actions that are like, instead of barging into manager's room and saying, I did an excellent job, and why are you not giving me a positive feedback? Why are you not giving me the feedback or the promotion that I deserve? Instead of doing that, he or she will be able to take a step back, recognize and understand that being angry, yelling on others is not my value. The values that I hold dear to me is being a good team player, is self-improvement, and to act on the feedback that the manager has given and politely go and initiate a dialogue saying, okay, I think I did a good job. What are the areas which you feel I did not do? And take a positive step towards the situation. That is only possible when you unhook yourself from the difficult thoughts that you're experiencing. So some of the ways of doing that is that you ask yourself, the response the response that you're having, the reaction that you're having, is it going to serve you Is it serving your organization? So if you are having a practice and you have a difficult client, you need to ask yourself, is my reaction or my emotional outburst to that client is no is helping my firm in the long term? And if you are into a job, then you can ask yourself, is this helping me in my promotion or my growth? Is this making me a good team player? Is this aligning with my inner values and with with my long term goals? So mind, thoughts, and then you are able to take a step forward towards more positive reactions to and also avoid getting into a much difficult situation. Like once I had a colleague who barged into the manager's cabin and heard abuses because he was not happy with the late nights and with the extended work hours. In the long run, that person did not really do himself any favor. He obviously got fired for it. So do you want to lose the job? And if you don't like the job, if that manager is not kind to you, or he's deliberately putting you in a difficult spot, what are the ways of dealing with it also becomes clear once you are able to label your thoughts, unhook yourself, and act on your values. So these were the three steps. These were the three main steps that we can use to strengthen our emotional agility. So emotional agility is something that cannot be learned in a day. It is not something that you can immediately master it. It has to be practiced every day in every situation. And sometimes it is difficult to practice. Sometimes you may not be successful at it. Important is that you take baby steps towards it. The mind's thought and streams flow endlessly. Emotions change like weather, no? But values that we hold dear to ourselves can change in any situation. In my example of being a working mother, I often have to face a situation wherein I have a very good professional opportunity, but I have to let go because that does not align with my value of being a mother. But if I am able to see it positively only because I have been practicing emotional agility and is mindful of the emotions and feelings that I have. Instead of holding my kids and resenting towards it, I am able to embrace my emotion of letting go of professional opportunity for my kids, and often putting my kids' time or shortening my kids' time on by few hours to focus on the job I'm doing, because it is equally important to me to maintain my level of performance. Being able to take those decisions, being able to remove ourselves from the situation, from the pattern of thoughts that we are having, is what emotional agility is all about. So that's all from me today. I hope you guys are able to learn something new and practice emotional agility in your day-to-day life. Over to you, Alka.
Thank you so much, Mohsini, for explaining us the real meaning of the word emotion. This was the first time I ever gave a new thought to the word emotions. Otherwise, you gave us an idea of do not focus on being happy. So this is real meaning which you gave us today, and we will surely practice how to be emotionally agile, right? Thank you so much for sparing your valuable time and enlightening us on the very important topic, especially for a working woman who actually need it each and every second of life. Thank you so much. We have few questions.
Yes.
First question being is, it is always said that emotional people are always losers in life. Is it so?
Not really. I feel so. One thing that we learned from the video, what did the video tell us? That the emotions prepare us for the emotions spawn from our experiences, and our experiences prepare us to face the new experiences in future. So being able to learn from those emotions and not always act on it is our strength.
Thank you so much. Another question is, mind over emotions or emotions over mind? Which is better?
There's no one answer that fits all. But mindful emotion is what we talked about, right? That viewing our emotions as a pattern, getting unhooked is, and finding a solution to our emotions that aligns to our values. So that is where, no, you cannot separate mind from emotion. It's intertwined. Your mind is
Hand
where
in
the
hand.
yes.
Thank you so much. Now it's time to wind up the session. I would like to, it will be a great honor and privilege to propose vote of thanks for today's session. I would like to thank Sri Amirji Chopra sir, Preeti Savla ma'am, and Sri Priya Kumar ma'am. They couldn't attend today's session for some unavoidable reasons. I would like to thank all the participants for joining us, and special thanks to both of the speakers who gave their valuable time and enlightened us today with their value addition, with thoughts, ideas, experiences. Thank you so much. And our technical team for helping us, supporting us, making me know that my voice is not audible. Thank you so much, all of you.